engage with a tax professional or consultant to ensure your business is fully compliant. So on a monthly basis, once you're filing your return, as a business owner, you might not be having the relevant knowledge regarding the taxes or even the skills. So it's good to engage that tax professional so that they can be doing that for you, or even be doing the consultancies with them so that you can be aware of the changes that are happening in the tax environment. Also, in case of you have received a tax audit from KRA, it's good to engage a professional. Don't handle that thing yourself, because at times you may not be in the career they're inquiring from you, and you end up confusing yourself or even giving up information that is not relevant, exposing your business in a different way. So it's good to engage a tax professional or consultant to handle your taxes. Regularly check the official communication from KRA to stay updated. So once you register your business or company, the email that you give out to KRA, that's where they will be communicating to you on a regular basis. In case they want to demand anything from you, they'll send a letter to you. At times they appoint people to be withholding agent. They'll send an email to you. You have been appointed to be a withholding agent. But if you don't check those communications, you won't be aware. And at times they'll come to you demanding even penalties because you have not adhered to what they requested from you. So ensure that you check your emails to check on any communication from KRA. Respond promptly and accurately to KRA upon request of information. So every time KRA communicates to you, they need maybe sales record, submit the bank statement to them. You should respond to them and provide the requested information. They have authority to yeah. So it's upon you to ensure that you respond to them upon any request and even provide the document that they have requested from you. So those are the guidelines that we have, and also the aspect of tax compliant. So for you as a taxpayer, for you to remain tax compliant, ensure that you check on those aspects and also the guidelines. Observe those guidelines for your business to remain tax compliant, so that you cannot find yourself on the wrong side with the tax man. So what are the importances of being tax compliant? So number one is a legal requirement. So the tax law, we are expected to abide by those laws that are set. So you being tax compliant, you are abiding with those tax laws. The other importance is access to capital. You find that you want financing from a financial institution or even other investors, and they will request to see your tax compliance certificate from KRA. So for you to access any funding or even capital, you need to be tax compliant. So ensure that you are compliant at all times, so that whenever maybe an investor or a third party requests your compliance certificate, it's very available from KRA. We have improving business operations. So through the access of the funding, you can be able to maybe expand your business, invest more in your business. But without the proper tax compliance, it will hinder you from doing that, thus lagging behind your business. It will enhance growth through tendering and mergers. I believe if not all of us, we do apply for tenders, and that's one requirement that they request from us during that process. Submit your tax compliance certificate from KRA. So by being compliant, you'll be in a position to access those tenders. Operating with a peace of mind. This one is common to us. Every time that we have issues with KRA, unakaa ukiwa umesumbuliwa, because anytime we are expecting KRA will come to me, they will communicate to me, I've not paid the taxes for the last 2 years. So anytime you are saying that you are expecting them to communicate to you or even to come to you, but by being tax compliant, you are doing your returns on time, you are paying the taxes on time, you have a peace of mind, and it will enable you to operate peacefully and even enhance growth in your operations. We also have maintaining good reputations. Yeah, by being tax compliant, we have a good reputation, and it will also attract even investors to come to your business and even customers, because we also want to engage with maybe a supplier who is tax compliant. Even your customer, you want to trade with people who are tax compliant. So it will enhance by having a good reputation. You'll be in a position to engage with your suppliers and any other third party that is interested in your business. We can also access government services and contracts by being compliant. So all these services that we want to access from third party, be it a government, investor, or even funding from the financial institution, a tax compliance certificate is a must. And you cannot obtain a tax compliance certificate even if you have an arrears of 10 shillings with KRA. If there is an arrear in your portal, you cannot get that certificate. So ensure that you are compliant, you don't have any arrears with KRA, and your account is very smooth. So you get the compliance certificate. So those are the importances of being tax compliant. So we check on the tax structures. So in case of any question or any issue that you may be having, you can type in the chat box, and my co-host will address that to you. Also for the questions, they're going to respond to them, but we're going to have a question and answer session at the end of the session. So in case of anything, feel free to type in the chat box. So under the tax structures, we are going to look on the different obligations that are there for businesses and companies. So number one, we have the corporation tax. This one is for businesses. And for the individual, for businesses, we have the income tax, resident, individual. Then we have the pay-as-you-earn, VAT, withholding tax, rental income tax, capital gains tax, NSSF and NHIF, housing levy, stamp duty. So these are the tax structures that we have, and we're going to look at each of them. So under the corporation tax, this is whereby this tax is levied on the profits of a business. So at the end of the year, we submit our returns to KRA. We declare our income and the expenses that we have incurred in that year, and we have the resultant profit. So corporation tax will be charged on that profit, and it is a rate of 30% for the resident companies. So on the other hand, for a business which is operating under the individual, so the profit will be subjected to tax, but on a graduated scale, not the 30%. So that's the difference between a company and a business. So for the company, the tax is 30%. For the business and operating under an individual, the tax is computed using the graduated scale. So we have the timelines. So for the corporation tax, we are expected to file this by the end of the 6th month after your accounting period ends. So different companies or businesses have different year-end period, but most of us, the accounting period ends at December. So for the year 2024 that ended in 31st December, we have until June, 30th June, to ensure that we remit our taxes to KRA. The businesses, you should be having 6 months. You ensure that your auditor has audited your books and they have remitted the returns to KRA and have made the payments within that timeline. So failure to observe that timeline, we have penalties and interest. We also have another timeline whereby we have the quarterly installments. This one for businesses and companies. KRA expects us to remit installment taxes on the 20th of the following month. That is on the 4th month, 6th month, 9th, and the 12th month of our company financial year. So for instance, for a company whose year ends at December, by April 20th, you're supposed to remit installment taxes. And what are the installment taxes? So installment taxes estimation from the previous year. So let's say in the year we are in year 2025. So by April, you are expected to remit the first installment tax. So how you performed in the year 2024 will guide you on how to remit the taxes. So they expect, if 2024 you made a profit of 1 million, 2025, you're supposed to make a profit of 110%. So it will be 1.1. So using this estimation, you're supposed to pay taxes on that. That is 30% of 1.1 using the 4 installments. So you remit that to KRA. So by December, you'll have limited the 4 installments. So by January, you engage your auditor, they audit your accounts, and they prepare the I was supposed to pay a tax of 500,000, but from the installment taxes, I've paid 300. So you have a balance of 200,000 that you are supposed to remit to KRA, and that one should be done by April. So you don't have June to file your returns. So for those who are in a profitable position and you have the installment taxes, ensure that you have paid the balances of tax by April. Failure to do that, we also have penalties for that. And also underestimation, like the instances that I've said that you had a profit of 1 million. So you estimate 2025, you're going to be having 1.1 million as your profit. But the tax that you're supposed to pay, you underpaid using the, you underpaid. Maybe you're supposed to pay 500 using the installment, but you have paid 300. So that is underpayment. They'll still penalize you. So make sure that you have done your audit on time so that by April you have paid the balances of tax to avoid those penalties. So we have penalties resulting from timelines. So we have the late filing of returns. It will attract a 5% of the tax due or 20%, 20,000, whichever is higher. So I've said for a person whose year ended on 31st December, you have up to June to file your return. Assume you file your return on July, you'll pay 20% for 20,000 for late filing, or 5% of the tax due. So we should ensure that we observe these timelines to avoid this month the unpaid tax. So you have paid your taxes on time, you have paid your returns on time, and you have a resultant tax, maybe of 20,000 to pay, but 1 month has elapsed, you have not paid that tax, so you'll accrue 1% interest, which will be an additional cost to your business. So ensure that you have observed the things. Do the returns on time and pay to KRA on time to avoid the penalties and interest. Next obligation is the pay as you earn. I believe we have all encountered the pay as you earn. If you are not an employer, the employee's salary on a monthly basis. So the salaries that you receive from your employer, it is subjected to pay as you earn tax, and the employer remits that to KRA. So it is the responsibility of the employer to deduct and remit to KRA that tax on your behalf as an employee. So for the pay as you earn, the tax rate is not applicable, and the minimum is 24,000. So excuse me. So 24,000, incorporate them in your monthly pay returns, because at the end of the year we'll have documented the salary and wages that we have incurred as a company, and we can expense that entirely as an expense in our returns. But if you just declare those employees who have, it will limit the expenditure that we are going to claim at the end of the year. So ensure that all employees are included in your pay-as-you-earn returns. Every obligation have a penalty for late filing and an interest. So for the pay-as-you-earn, you're supposed to file on or before 9th of the following month. So we are in February. So by March 9th, you should have filed the payee returns for February and made the payments to KRA. We also have the relief subjected to pay as you earn. We have a personal relief, which is 2,400 per month or 28,800 per annum. But because pay as you earn is done on a monthly basis, so you are subjected to 2,400 per month. The other relief, at the moment, that's the only relief that we have. Initially, we had the housing levy relief and the insurance relief resulting from the NHF or the SHIF. But on December, we had some changes on the pay as you earn, whereby the SHIF and housing levy became allowable deductions. So they also did away with the relief associated with that. So the only relief that we have now is the personal relief, which is 2,400 per month or 28,800 per annum. The other obligation is the VAT. So I believe you are asking the questions in the chat box as we continue, so that anyone cannot be left behind. We continue on the same path, and you're going to receive responses on the chat box. The other obligation is the VAT. So VAT is a consumer tax charged on the supply of taxable goods and services. So if something is not taxable, it is not subjected to VAT. And note that VAT, it will apply to both goods and services. So don't say that I deal with services, so I shouldn't be having the VAT obligation. It's both for the taxable goods and services made in Kenya. We have a standard rate for the VAT, which is 16%, but we have other rates. 16 is the general rate or the standard rate. Then we have exempt. Exempt, there is no tax associated, there is no tax rate associated with exempt, and the zero rated, which is associated at 0%. So we have a difference between the two. Exempt and zero rated. For the zero rated, the tax rate is 0. So that good or service is charged 0%. But for exempt, it is completely exempted from the VAT tax. So different goods and services are categorized in those categories. And to have a broader or rather a wider knowledge of those goods and services under the different category, we can check on the VAT Act. They have listed all those goods under the general rated, the exempt, the zero rated. Like category, that was the 8%, but with changes, it was deleted from the Act. So currently we don't have the 8%. We only have the 3 categories, that is the 16%, exempt, and the zero rated. And the changes keep on happening, so it's good to be updated. Using the VAT Act, we can get updated on the different changes that will keep happening. You can find that today this item is under the zero rated category. Then the next month it is under the exempt. It will be not updated in the VAT Act. So it's good to visit the VAT Act and get a broader knowledge of the listings of those categories. On the filing and the payment, VAT we have the small returns for January, the VAT returns. Failure to do that, we have a penalty of 10,000 and an interest of 1% on the unpaid taxes. So let's observe these timelines to avoid additional costs and also to remain compliant. Under the VAT, we have the withholding VAT. So if at all you're not an agent, you have encountered instances whereby your customer have withheld an amount from you. They have gotten goods from you, but instead of paying the entire amount to you, they withhold a certain percentage and they pay that to KRA. So that's where the VAT withholding applies. For you to be a withholding agent, KRA has to appoint you, and they communicate to you through your email. They'll send an appointment letter that ABC Limited, you have been appointed starting today, 19th February 2025, as an withholding agent. They expect you to be withholding on a monthly basis on the purchases that you make. Withhold 2% and remit to them. Failure to do that, they also audit you and they demand the taxes from you. Maybe you have made a purchase, maybe for a whole year you have made a purchase worth 1 million. 100 million, but you never remitted any withholding tax to them. So they'll demand 2% of that because they expect you as a withholding agent, you withhold 2% from your supplier and remit that to them. So if at all you have received that communication from KRA, be compliant, ensure that you have withheld your suppliers and paid to KRA. Also on the timelines for the withholding agent, you have 5 days from the date of payment to ensure that you have remitted from KRA. Initially, the timelines were in line with the normal VAT by 20th, but changes were made and you have just 5 days to ensure that you have withheld and paid to KRA. The other obligation is the capital gain tax, CGT. CGT, maybe it's not open to anyone. Some of us have not encountered this. For those who have encountered, we know what CGT is. It is a tax on the transfer of property, which is in Kenya, and it was acquired on or before January 2015. You have sold land or even a building, which is classified as a property. You're supposed to pay the CGT tax to KRA. So any transfer of that property, you should be paying the CGT tax. And through the KRA audits, they'll still come at a point and see that you sold the land to someone, but you have been declaring the nil returns. So they'll still audit you and they want to get the CGT tax from that sale that you made. So it is declared and paid by the transfer of the property. You as the seller of that land, you are the person who should be declaring the CGT tax and paying to KRA. The rate is 15%. So it has increased. Initially it was 5%, but currently it is at 15%. So we should be updated on these changes that are happening from KRA. So it is charged on the net gain. So you have sold this. So the net gain is the sale value, you less any incidental cost that you have incurred. So the gain, that is what is subjected 15%, and you pay to KRA. Also to note, the CGT is a final tax. So what do we mean by a final tax? So the transactions has happened today and you have paid your 15%. So KRA at the end of the year, they don't expect you to declare the same income that you received here to charge it to another tax. So by final means, it has you have paid that tax today, and that's all. That income won't be subjected to any further taxation. So by net gain, it is the sale proceed minus the acquisition and incidental cost. You sold that land for 10 million. You got it at 5 million. Then through at that point of selling that land, you have incurred some costs. We are going to see examples of those costs. So you deduct them. So the net gain that we result is what is subjected to the CGT. We are referring to incidental cost that you should deduct from the sale of that property. So you have the cost of acquisition or construction. For this case, if it's a building, the construction cost, yeah. Then we have the loan or mortgage interest. You acquired this land use through loan and you have been paying the interest. Or for a building, there is a mortgage interest that you have been paying on a monthly basis. You should also deduct that when you're computing the net gain for that property. We have the cost of advertising to find a buyer. So every time that you want to sell a property, you have to advertise that. Any cost that you have incurred in that process, it's also an incidental cost that you should deduct. Cost incurred in valuation of the property. Yeah, once you find a buyer, you have to involve a valuer so that you can determine what the value of this property that you want to sell. Any cost that is incurred at that point is also excluded. You have the legal fees and the cost of enhancement. Since you obtained this property, you have done some improvements. You have fenced this property, umeweka maji huko, there is a perimeter wall. So those costs that you have incurred, they are also allowable. So note this, that any transfer of property, KRA expects you to pay the CGT tax. We also have some exemptions. So not every transfer that is expected to for you to pay so much on tax. So exemption number 1, income that is taxed elsewhere is the case of the property dealers. So we have several property dealers here that we know. So in that case of that property dealer, let's say these land selling companies that we have, the real estate companies, they're subjected to VAT. So that income that they received, they have paid VAT for it. So in this case, they are exempted. Since that income, it was taxed under the VAT. So they won't be required to pay any CGT on that. Number 2, we have the transfer of property for the purpose only of securing a debt or a loan. Yeah, so you have gone to Equity Bank, you want to obtain 10 million loan, and you have used your land as a security. So that transfer from you to that bank, we don't consider that as a transfer that is subject to CGT, because eventually there is no gain that you have received from that transfer. Transfer by a creditor for the purpose of turning property used as a security for a debt or a loan. So you have finished paying your loan to that financier or any creditor, and they are now at this point, they want to transfer this property from them to you. They are transferring this property back. So there is that change of hand from the creditor to you. So also that one is exempted from the CGT. The other one is transfer by a personal representative of any property to a person as a beneficiary in course of administration of an estate of a deceased person. So in case of this, a person is deceased, and there is that transfer between that person to the person who is a representative in this estate, or else the beneficiary. That transfer is not subject to CGT. Transfer of asset from between spouses. Your husband or your wife has transferred a piece of land or building to you. You also should not be subjected to CGT. We have transfer of assets between former spouses as part of a divorce settlement or a bona fide separation agreement. So you have followed the divorce proceeding in the court, and you have not to divide the properties among yourselves. So in this case, you have received maybe 5 acres of land from your partner, or even the building. So that transfer is also exempted. Transfer of assets to immediate family. So in case of inheritance, that one is also exempted. Also, a company where spouses or a spouse and immediate family hold 100% shareholding. The other one, you have a private resident. So if an individual who is an owner of this private property 3 years prior the transferring period, you are also exempted. So 3 years is the limit. If you have occupied these premises for less than 2 years, you should be paying the CGT tax. So note those exemptions so that you cannot end up paying the CGT tax, whereby you qualified to be exempted. The other obligation is the stamp duty. It relates to the CGT because also for the stamp duty, you pay this tax where there is a transfer of property ownership, but not the difference between the CGT and the stamp duty. For the CGT, we have said it's the seller who is paying the tax, but for the stamp duty, it's the buyer. So the seller is paying the CGT. On the other hand, you as the buyer of this property, you should be paying the stamp duty. We have different rates of the stamp duty. Currently, we have at 4%. This is whereby this property is located within an urban area. And also the 2%, if the property is located in the rural areas, uko mashambani, so your rate should be, it's a bit lower, it's 2%, but in the urban area, it's 4%. So those are the 3 points to note. The stamp duty is paid by the buyer. It involves the transfer of property and the different rates. So those are the differences between the stamp duty and the capital gain tax. So I believe you are getting responses in case of any query in the chat box. So as we proceed to the different tax structures, so we have the withholding tax. Under the VAT, we talked about the VAT withholding tax, but there is the general withholding tax. We have the professional fees, we have under the contractual fees, commission, they are different and different rates applies to them. So for the withholding tax, the tax is deducted at source. E.g. tax on professional services. You have received a professional services from an auditor or any other consultancy, from a lawyer. Those services that you have received, you are supposed to withhold 5% when making payment to them and submit that to KRA. And how will KRA know that you never submitted? At the end of the year, you come and claim that you had a professional fees of 2 million, but in your portal you have not paid any withholding tax on that 2 million. So they'll still demand that. You have legal fees of 500,000. Is there any withholding tax that you submitted to KRA? So they'll still audit you on those on the returns that you submit to them. So ensure any professional service that you receive, you have paid the withholding tax to KRA, and the supplier you have paid the rest the amount. So different categories, they apply using different rates. We have the professional services, contractual, commission, they apply differently. So ensure each category that you receive a service that you have subjected that to withholding tax and paid that to KRA. Before you engage any service provider, discuss that with them so that at the end of the day, they won't come to disagree with you at the point of payment. The next is the rental income tax. So rental income tax, this one, I believe we have been doing this on a monthly basis. For the rental income tax, we have the residential, zile nyumba tunaishi, those apartments. So the owner or the landlord, they're supposed to pay a tax to KRA at a rate of 7.5 on a monthly basis. The income that you receive on a monthly basis, make sure that you have subjected 7%, 7.5% to KRA, and you have paid. Initially, the rate was 10%, but with changes, currently we are at 7.5. And this, the residential, we have a threshold that is between 28,000 and 15 million if your property, you receive an income of 15.5 million, is for the MRI, it should be done on a monthly basis, and it's a final tax. That income you receive from the residential property, it's a final tax, and we said that by final we mean you have done that on a monthly basis. So by 20th tomorrow, you're supposed to file the monthly rental income tax. So at the end of the year, you're not supposed to declare that income and subject it to further taxation. But for the commercial property which is subjected to VAT, it will still be subjected to the corporation tax at the end of the year. So those are the major taxes that we have, but still we have this other statutory. We have the NSSF, NHF, not our SHIF. Currently we are using the SHIF, housing levy. Those are statutory deduction, but they apply to the taxes because in one way or another, they relate to the taxes that we do. So the NSSF, SHIF, housing levy, they relate to the pay-as-you-earn. When you are paying the pay-as-you-earn on a monthly basis, this is where the NSSF is linked in, the SHIF, and also the housing levy. So NSSF is a statutory deduction. So we have new rates that became effective on 1st February 2025. So for the February salary, we are going to see a change from the January salary because there are changes that were introduced from the NSSF Act, which became effective 1st February. The changes are, we have the lower limit, which was increased from 7,000 to 8,000. So initially, the lower limit was 7,000, currently it is 8,000, and the upper limit was 36. Currently it has doubled to 72,000. So even the deduction, it will double. If you are earning 36,000, you are supposed to contribute 2160 on a monthly basis. But now you are earning 72,000. 6% of 72, it is 4320. But initially, it was to be deducted for 2160. So the deduction has doubled. Whatever you are contributing last month, you contribute a double of that this month. So it will affect even the net pay that you are taking home. It will reduce. So this is a change that happened, and it will continue happening for a period of, it was supposed to happen for a period of 5 phases. This is the 3rd phase. So we still have 2 more to go. So the rates will keep on changing. So from the changes, that is the lower limit and the upper limit, the contribution have changed. So as an employer, you're supposed to deduct 6% from your employee and remit the same 6% on their behalf. So it's a total of 12% on a monthly basis. So last month, that is when the lower limit was 7,000, you are supposed to be contributing for 20 as an employee, and your employer will contribute for 20 for you. So the total is 840. But now the lower limit is 8,000. 6% of that is for 80. So at the end of the day, you are supposed to contribute for 80, and your employer will contribute for 80 for you. So that is a total of 960. Then the same will apply to the upper limit, which is 72,000. Initially, you are receiving a salary of 72. So 6% of that, it was still coming to 2160 because the upper limit was 36,000. Anyone earning 36,000 and above, the contribution was fixed 2160. But now in this case, you are earning 72. So it will be direct 6% of the 72,000, and it will be 4320. So it's a double of what you have been contributing. So as an employee, you get deducted 2160 from your salary, and your employer will contribute 2160 and 4320. So it will be a total of 8640 for that month. So those are the changes with NSSF. And for the NSSF, it is an allowable deduction, so it's not taxable. So the contribution that you make on a monthly basis, it's allowable from when computing the pay as you want to pay, it's an allowable deduction. So it won't be taxed. The other item is the SHIF, the Social Health Insurance Fund. I believe all of us, we are aware of this, and it became effective on October 2024. It replaced the NHIF. So currently we have the SHIF or SHA, that is what we are calling it. So it is a replacement of the NHIF. So we have some differences between the NHIF and SHIF. We can see under the NHIF regime, we were using a given contribution band from 150 to 1,700. 1,700 was the maximum that you could contribute to NHIF for anyone earning 100,000 and above. But in this case, SHIF, the rate is 2.75 of your income. So the maximum you can contribute is 27,500. So you can see the shift from 17 to 27,500. 500. So at the end of the day, the net pay that you are receiving is a bit lower. So under the NHIF, the self-employed individuals and voluntary contributors are expected to contribute 500, but for shift, the minimum you can contribute is 300 for those who are not employed, because they expect everyone to contribute so that you can be able to receive better help. Under the NHF, there is the 15% tax relief. So when covering the PSG1, we talked about the relief, and we said currently we just have the personal relief. So we had the insurance relief that was 15% from your contribution, but with the SHIF or SHA, there is no relief. So the relief was assisting in reducing our tax payable. So in this case, the tax is still increasing. So under the NHIF, it covers services in the level 1 to 3 health institutions, but not for the SHIF, it's covering level 1 to 6. So there is a wide coverage under the SHIF or SHA. So those are the differences. So ensure that you have registered with SHA if you have not, and also you have added your dependents. Currently, when we are doing the SHA returns, the visa notification, ensure that all your employees, they have added their dependents on that portal so that they can access the benefits. So I believe we are still together. So the next item, we have the housing levy. So the housing levy is under the Housing Act 2024. So the Housing Act, it was signed into law in March 2024. So that one is an independent act. So it is a mandatory contribution for both those in the formal sector and also in the informal sector. If you are employed, you are supposed to be remitting 1.5% of your salary to the housing levy. And also, if you're not employed, or rather you are in the informal sector, they expect to receive the same 1.5% of your salary, or rather the income that you receive on a monthly basis. So for the employed people, you are supposed to be deducted 1.5 from your salary, and your employer should match the same. So at the end of the day, your contribution is 3% per month. You contribute 1.5%, and your employer will contribute 1.5. So the deadline for the housing levy is 9th of the following month. So by March 9th, we are supposed to remit the housing levy for February. The filing is done together with PSU1. So those who have been doing the PSU1, I believe you all know how to submit the housing levy. But in case you don't have the PSU1 obligation, or those in the informal sector, you can still access the portal and obtain the payment slip to pay for the housing levy. We have a penalty for late payment, which is 3% of the unpaid amount. So you have done your computation and you have seen the amount that you're supposed to pay, the 1.5. Failure to pay that, there is a penalty of 3% of that amount. So for us to be compliant, ensure that you have paid all the taxes due and observe the timelines to avoid the penalties. So the housing levy, it is subjected on the gross monthly salary, not the basic. By gross here, we mean the basic that you receive and the regular cash allowances that you receive. So gross, it's under the basic salary and the so any allowance that you receive that is not. So if you don't have the pay obligation, ensure that you also submit your housing levy contribution. That is 1.5% of the income that you receive on a monthly basis. And currently under the KRA audits, they're also checking the same on the housing levy from the informal sector. So we have covered the tax structure, the different tax obligations that we have, and the tax, the statutory deduction in relation to the PSU1. So our next item, or rather the content for today, is the items. So as we move to the items, so continue asking your questions. I believe that they've been responded to, and we are in the same position together. We don't want to leave anyone behind. So items is not new to us. I believe we have encountered that. So items is not new to us. Once you're making a sale, or rather you're purchasing, you receive an invoice. Confirm in the chat box. Confirm whether you can see my screen so that we can proceed. And also, as we proceed, there is a more. Okay, apologies for that. So we have changed our network connection. So in case of any issue, kindly raise in the chat box so that we can address. So we were talking about the items, and as saying as we go on, also in the chat box, we have an attendance register that you need to fill in, so that at the end of the day, you're going to receive the training materials. So we can proceed to So under the items, so items is a digital platform implemented by KRA to facilitate the transfer of our invoicing to them. So each invoicing that you do in your business, it's being transmitted to KRA on a real-time basis. That sale that you have made and you have provided an invoice, it's being received by KRA on a items basis. So it will ensure that you have transferred or you have transmitted that invoice to KRA. The same to the purchases that you make. Ensure that you give your KRA PIN so that they can be transmitted bearing your PIN or your identification. So it started in January 2024. Apologies for that. So in January 2024, KRA stated that any expenditure or rather any claim that you have that will not be supported by items invoice will be disallowed. So ensure even those expenses that we incur, they all have the items invoice. So we have a penalty for non-compliance, which is 1 million. So to avoid this being charged 1 million, ensure that you have the items with you, and also the purchases that you're getting from the third party and the expenditure, they are all supported using an items compliant invoice. We have some exemption when it comes to the expenditure. We have emoluments. We have the salaries. Salaries are not expected to be items supported. So you have paid a monthly salary to your employees. There is nothing that you receive from them. So that one is an exemption, so it shouldn't be having an ITIMS invoice. Also for the imports, there is no ITIMS invoice for imports, but this one now is captured on the uko kwa border. When we are paying those taxes under the customs, they have that data, so it will be captured under your portal as an import. We have investment allowances. It's also exempted from ITIMS invoice. Interest from any financing institution. You have acquired a loan or even a mortgage and you are paying the interest on a monthly basis. You don't have any invoice, ITIMS invoice to support that. So that one is exempted. You also have air passenger ticketing. It's also exempted. So those are the only expenditure which are exempted from ITIMS invoice. Any other expenditure that you have, ensure that it is supported. We have ITIMS solution, different categories of ITIMS. So we have the ITIMS Lite or USSD. So this one you can access this through *222# and you'll be in a position to issue an invoice using that. So it's very simple. So it's a mobile phone based. So using your mobile phone, you can just dial *222# and you can be able to issue an invoice to your supplier, to your customers. We have the ITIMS Lite Web or the eCitizen. I believe some of us are using this. So it's an online system under the eCitizen account, whereby mostly the sole proprietors or those with minimal transactions are using that portal, the eCitizen. So the different ITIMS solution, they depend on the different categories of goods or even services, the number of transactions that you deal in. So before you select the best solution for your business, you have to consider those factors. The third solution, we have the ITIMS portal. The ITIMS portal is basically for the service industry. You can say like LWK, we are dealing with services, we are offering service, we don't deal with goods. So ITIMS portal is suitable for a business. Any other person dealing with service, you can consider having an ITIMS portal. We have ITIMS client, it's a different platform. So this one is being installed in our laptops, our desktop, and it is suitable for a person dealing with goods and services. So if in your business you have both goods and services, consider having ITIMS client. But if it's just an ITIMS it's just services, we have the ITIMS portal. We have the online sales control unit. It is whereby you have a system integration. We find that in our businesses, we have different systems that we use. The online system, we can integrate them with this online sales control units so that the invoices that we produce from our system can be transmitted. So apologies for that. Digital platform introduced by KRA to ensure that we have transmitted our invoices to KRA. You have made a sale. That sale invoice has been captured and transmitted to KRA. And from 2024, KRA stated that every is supported by a valid electronic tax invoice, not just the major sales that you make, even the expenses. Ensure that they are ITIMS supported. Failure to do that, they will disallow. So at the end of the year, we have claimed expenses worth 10 million, but we don't have any invoice to support that. They will disallow that. We have a penalty for non-compliance, which is 1 million. Also talked about the exemptions for the items invoices. So different expenditure which are exempted because we cannot get an items invoice. We have emoluments for salaries and wages. Also the imports, under imports, the taxes and everything, they are captured on the customs. So KRA will get that data. So for the imports, you don't have to support with items because it's not even possible. We have the investment allowances. We have interest from financing. So you have a loan, you have a mortgage, and you are paying interest on a monthly basis. Those interests, we are going to expense them, but we don't have an items invoice to support that. So that one is exempted. And also the air passenger ticketing. So those are the exemptions, but the other expenditures and the income and purchases, you should support them with an items compliant invoice. We have the different categories of the items. So we have the items, right? This is whereby we use the mobile phone to dial *22#. That is what we refer to items, right? So by dialing *22#, we can be able to issue an invoice. Then we have the items, right? That is the eCitizen. I believe we are using the eCitizen. Under our eCitizen account, we have registered the items there. And this will apply to those clients with minimal transactions. Maybe in a month, you just issue 1 or 2 invoices. So that one is applicable for you. We have the items portal. So for the items portal, it's for those clients dealing with services only. LWK, we offer services. So that one is suitable for us. So if we offer goods, we cannot use the items portal. The next category is the items client. So this one is a software installed in laptops, desktop, and it's applicable to those taxpayers with goods and services. So you're dealing with goods, you can use the items client. You have both goods and services. Items client for the other category is the online integrated that. So we have integrated that. Okay, let me share my screen again. Visible now. We are under confirm, you can see that. Or when kindly confirm, you can see the items. So under the online control unit, this is whereby you have an online system as your accounting system. So you integrate it with the ITIN system so that you can be able to issue invoices. Then we have the virtual sales control unit. It's similar to the online control unit. The only difference is the system that you are using. You are using both online and offline invoicing system. So that one you can use the virtual sales control unit. It's very suitable for your businesses. So depending on which category so we can proceed. So those are the different solutions for the e-teams. So you can, if you have not yet onboarded on e-teams, of which we are past the KRA given timelines, you can consider the solution which is suitable to your transactions and onboard. So we have, as I've said, we are past the deadline for KRA. What does this mean to your business? So you need to adhere to the e-teams protocol. So KRA will still audit you and maybe issue communication to you. You're not adhering, you're not issuing e-teams invoices to your customers. Then we have the pre-populated tax returns under the e-teams. So those of us with the VAT obligations, I believe from November returns, we have been doing them using the auto-populated. So using the e-teams, this one will enhance us to have the auto-populated data. That is whereby we'll get sales that have been captured in the portal, purchases captured. So it's your responsibility to just verify, is this record captured, is it accurate? Then you proceed to submitting the return. So without the e-teams, your data won't be transmitted to KRA and you won't be in a position to file the returns. So the other one, we have the ensure meticulous tax record keeping. So this data was transmitted on real-time basis during the time of transaction. So even if you don't have that invoice at the moment, the data is captured with KRA. So there is a bit of record keeping with KRA portal, but you still need the physical document for verification. So there is real-time transmission of transaction data under the e-teams, as I've said. So you are producing an invoice now, so it will be transmitted on a real-time basis to KRA. So if you want to see your sales record captured, you can just download from the auto-populated section in the KRA. You'll see your sales for that period and also the purchases. And also it can assist you to plan better, because you can see maybe we are in date 19 of February. So by date 28, you'll be in a position to see how many sales do I have and purchases. What is my tax position? Do I need to get more purchases to reduce the tax payable that is resulting from the current position? So that's the purpose for e-teams. We have the automation of VAT registration based on revenue threshold. So once the data is transmitted to KRA, they can see you have reached the VAT threshold. For VAT threshold, it's 5 million. Once you have attained the 5 million sales annually, you are expected to register for VAT. So KRA already has that data. So there will be automation of VAT registration due to that. Validation of VAT returns declaration against items data. So when doing the VAT returns, just need to do to verify the record captured, because at times you can find maybe some of the purchases were not transmitted, even sales. So it's you to validate, is this record in the items, is it accurate? We have non-compliance with items, which may lead to heightened audit activities by KRA, which is ongoing. We have KRA audits due to non-compliance with the items. So ensure that we have items for businesses or companies. Greater visibility of compliance metrics through items is expected to promote greater tax compliance. So you find that using that record which is transmitted to KRA, there is maybe full disclosure of the sales that you have made and purchases. So at the end of the month, you find that you have even 1 million shillings to pay to KRA resulting from that. So you can't evade that. But initially, you were in a position to determine how much of my sales do I want to declare for VAT returns. You could under-declare your sales, but through e-tips, you cannot do that. So it is promoting compliance. Auto-populated estimates of corporate and installment taxes. Yeah, having the sales captured and the purchases and the expenditure, you can be able to estimate how much is the profit for this year. So by that, you can be able to estimate the installment taxes. How much do I need to pay? As we discussed about the installment taxes, that should be paid by the 20th of April, June, September, and December. So that data in the KRA portal, it will assist in your estimations. So that's all for the items. The next item is the tax planning. So during the introduction, I had said what tax planning is. So I said it's a proper analysis of your financial statements so that you can ensure that to pay least tax exposable without evading paying the taxes. So what are some of the strategies for tax planning? Number one, we have proper record keeping. So we have talked about proper record keeping. Ensure that all records for your business are well maintained. In case you are being requested to provide that by KRA, support your sales, support your expenditure, you have those records. Because once you fail to support, they can disallow those expenditure, leading to a higher tax to pay. So ensure that you have proper record keeping. We have accuracy when filing returns. So accurately file those returns, declare sales accurately, and even purchases accurately, so that you can be able to have a correct tax position. Understanding return timelines. So we have talked on the different timelines depending on each obligations that we have. So that one will enable us to avoid paying interest and penalty, which is an additional cost to our businesses. The other one is engaging a professional tax expert. So if at all you don't have any tax expert for your businesses, or you're not doing tax, proper tax planning, make sure that you have that tax expert engaged with you so that they can advise on what to do, and also they will assist in the tax planning process. So those are the tax planning strategies that we have. So the next item is the KRA ongoing audits. So we have the KRA ongoing audits. So you continue asking the questions in the chat box, and I believe you are getting responses. And also the attendance, you confirm your attendance there. So on the KRA ongoing audits, so we have the returns review. I believe we are receiving communication from KRA of their intentions to review your returns. So, and they will ask you to submit documents to them. Submit your audited financial statements, the ledgers, they want to verify or review the returns that you have filed. We have the rental assessments. So we talked about the MRI or the monthly rental income, and also the commercial properties. They also want to assess, is the taxes that you have been paying, are you paying the proper taxes as you should, or you are receiving more income and paying less taxes? We have the expenses assessment. You have claimed expenses worth 10 million for that year. Is it valid? Are those expenses incurred in your business? Can we see them in the ledgers? Do we have the invoices to support those expenditures? So those are the ongoing KRA audits. Also the VAT credits. For the last 2 years, your VAT returns is in a credit position. That one is also another trigger. So if you are in that position, the credit position for loan, so you should expect an audit from KRA. So it's good to be doing a proper analysis, or rather the tax planning. Ensure that you're not in that credit position for so long. Comparison between turnovers in the income tax return and the VAT returns. You find that whatever you submitted in the VAT returns does not tally with the income you have declared at the end of the year. So that one is another trigger. So to note, at the end of the year, your income should correspond with the VAT income that you have declared throughout the year. If there is any variance before you file, make sure that you address that and file the correct position. Any variance we need to an audit. We have advanced taxes on commercial motor vehicles. So we have commercial motor vehicles in our businesses, and under the returns that we have submitted, we can see the motor vehicle under the asset, but you don't pay any advanced tax on those commercial motor vehicles. You still receive why have you not been paying the advance tax? They'll go ahead to audit who is the right owner of this motor vehicle. Is it for this company or is it for director? So it's good at the beginning of the year, make sure that you have limited the advance tax on commercial motor vehicles. We also have import and export information. So whatever data is captured in the customs, again, claimed these are triggers or other factors which will facilitate, which will lead to that KRA audit. Number one, we have non-filing and late filing of returns. So you have the VAT obligation, but from January last year, you have not submitted your returns. You have been filing your returns past the given timelines. That one is a trigger. KRA will audit you. They want to know why you have not been submitting your returns. You have been doing it late every time. So that one is a trigger. IFMIS system used by government to pay its supplier. Is the record in the IFMIS, it's showing LWK supplied the government with services. Have the same person declare the same on their side. So that record will assist in the KRA audit. It's a trigger. If LWK is appearing in this IFMIS record, that means they supplied the government with something, but on the other hand, LWK has filed a nil return, so they are not compliant. It will trigger an audit. Significant variations in amount declared in returns. So we have the pay-as-you-earn. Is the pay-as-you-earn amount that you have declared per year corresponding to the salary and wages that you have claimed? Also for the income tax, the sales and the VAT and the purchases, are they in line? So those variances between those different obligations, they will trigger a KRA audit. Continuous losses for your company. So you have been in business for the last 5 years, but every year you make a loss. So it will trigger KRA to come to you. Industry trends versus specific company profit. So you are in the real estate industry, but the other companies in that industry, they are reporting profit, or rather the profit margin is not in line with whatever LWK in that industry is reporting. So you should be in line even with the other companies in your industry. Do a benchmark with the different companies so that you can see what you need to be reporting to KRA. We have third-party information. Maybe from employees of your company, they go and give KRA those information regarding your company, prompting KRA to come to you. Media attention to a company, it will also trigger KRA to come to you. Current or former employees giving out information, and also intercompany transactions. So those are the audit triggers. So in case you have any intercompany transactions, make sure that you have done proper analysis and you have accurately accounted for it. A failure to do that, KRA will still come to you. And the audit, they are doing them randomly. So each and every day they are sending letters to taxpayers for audits. So what are the actions that you need to take during an audit? So you have received a KRA letter of their intention to audit you. What should you do? Number one, you have to understand the time frame given by KRA. So they send you a letter, they give you 7 days to respond to that letter, or rather 14 days. So understand that timeline. Make sure that you respond by the given date. If you're not in a position maybe to provide the records required, request them to add you more time, and they will do that. So understand the given time frame and respond. Evaluate the information required by KRA. In the letter, they have asked for different records to be provided. Evaluate that. Do you have the ledgers? How are your ledgers? Are they accurate? Are they in line with the returns that you have submitted? Carry out a pre-audit compliance check. Before you submit those documents to KRA, make sure that an audit is done so that they can show your current tax position. What is the tax implication? Do you have that when you submit those data? What will result from that audit? So before you submit anything to KRA, make sure that you know the tax implication of every record that you have. The other action is having an opening meeting with KRA team. So it's good that you go there to KRA, you or either your tax expert. You have appointed a tax representative and you have communicated to KRA. I have appointed LWK as my tax representative. They need to have an opening meeting with the KRA team to understand this audit and what is expected of the taxpayer. Assign a contact person from your finance team to be the contact person. So it's LWK having an audit. Assign Mary as the contact person. Not every day whenever KRA calls, they'll find Alex. No, tomorrow is charity. So have that specific person to be responding to KRA. Resolve as many issues as possible during the audit process. So ensure every issue that KRA has raised during that audit, it has been resolved and there is no further issue arising from that. Ensure you receive an official letter of findings from KRA. So this one is very necessary. During an audit, you have closed the audit, you have agreed on maybe the amount to pay or even your tax position. Ensure you receive an official letter from KRA with the findings to close that audit. Then the last action is to pay any taxes which are not in dispute. So you have reached into an agreement with KRA and you are expected to pay 10,000. Make sure that you pay that amount. So those are the actions that you need to take during a KRA audit. So we have roles of a tax advisor. We have said that we need to engage a tax professional or a tax expert. What is the role of this tax expert or professional? Excuse me. So you have appointed LWK as your tax advisor. What is the role? Number one, they have to conduct a periodic tax compliance check. So in case of that audit, they should do an audit or rather check before they submit this record to KRA. We have to interpret the changes in tax. So we have talked about the various changes that have been happening, maybe on the different rates. When it comes to VAT, we have said about the VAT, the other rate that was deleted. Currently, we don't have that. So in case of any changes that is happening, they need to be interpreting to the taxpayer so that you can have the know-how and know the current position in the tax world. Conducting tax risk assessment before audit. So yeah, before KRA audit, the tax expert, they should do that for you. Being available during the audit. So KRA, they want these documents. Is your tax representative there? Are they available to communicate to KRA? Actually, you as a taxpayer, you should be just behind there, wait for your representative to handle that matter with KRA. Ensure successful closure of the audit with fair assessment. Yeah, that is the role of the tax professional, to ensure they have engaged with KRA, they have come up with an agreement. During that closure, was the taxpayer charged fairly? Was the assessment done fairly? So that's the role of the tax advisor. Basically, anakutetea kwa KRA. So even if KRA, they want 10 million from you, is it fair? So the tax advisor is there to negotiate with KRA so that we can come with an agreement which is fair to both parties. The other role is to help resolve any tax dispute with KRA. Tax training to enhance operation. So taxes keep on changing, so it's good to receive this training on a regular basis so that you can be updated on any changes. Also for the tax planning. So those are the roles of the tax advisor. We come to the other items, which is resolving tax disputes. So the tax dispute, now here we are at that point during audit. There is a dispute between the authority and the taxpayer. So how do we resolve this? We need to know when does this tax dispute arise. So the dispute begins at the issuance of a tax decision by KRA. So KRA issued a communication to you, giving you a notice. They want to audit you. They want to verify your returns. You have provided the requested document, and KRA, they have sent a letter to you. They demand 5 million from you because maybe there was a declaration of tax. So that's their decision. They have decided you need to pay 5 million. So that's where the dispute begins. Once you receive that communication, they demand from you, you can object. You are allowed to object you are allowed to object on that decision made by the commissioner. You have 60 days, that is 2 months, to object to that decision issued. After you have objected, KRA, they can go ahead to reject or even accept your objection, depending on the basis of your objection. You have given the reason as to why you object that decision they have given you. If they accept, well and fine. If they reject, they will communicate to you they have rejected that objection and they have given their reasons as to why they have objected. So what happens next? You are allowed to appeal that decision. So you have received the decision, the objection decision from the authority. You can appeal that under the TAT. That is the Tax Appeal Tribunal. So as a taxpayer, you have that right to appeal. From the Tax Appeal Tribunal, if there is no agreement that has been reached, you have a right to appeal to the High Court. If the decision that was passed in the TAT, you are not satisfied with that, you can go further to appeal to the High Court. Once in the High Court, the engagement will go on. If at all you're not satisfied, you can opt to use the alternative dispute resolution mechanism. So in this, the ADR, this is where you're not using the court, but there is an ADR member. So it's an alternative method that you have opted to use to solve this matter. So this is basically the audit process, whatever we have discussed there. So this is the starting point. Notice of intention or to audit is issued. You receive that letter from KRA. KRA audit is done. So in the letter they have issued, we want to audit RWK for the period between 2020 to 2025. You are requested to provide bank statement to them, audited financial statement, ledgers, everything. you have provided to them. So they do an audit basing on the records that you have submitted. From the audit, step number 3, they issue a tax demand in case there is any non-compliance. After analysis of the bank statement, they find that RWK has an income of 10 million in the year 2024, but RWK fell 2 million is their income, so there is non-compliance. So they issue a demand. They demand a tax on the under-declared sale. So in case of any non-compliance, be it on the revenue, the salaries, any non-compliance, they issue a tax demand. Once you receive the tax demand, step number 4, it's upon you as a taxpayer. If you're not satisfied with that demand, you have to object. You object to that demand, citing valid reason. Why do you object to this demand? They have demanded 10 million. They have said that you under-declared 5 million sales for the year 2024. Cite your reasons. Maybe this income in the bank statement, the money received, that one was not income, it was a loan. Give those valid reasons and support them. So you have a right to object. So after objecting to the demand, we have a period of 60 days whereby KRA will verify that objection. Either they will accept or reject the objection. Then they will communicate to you. In case they have objected that decision, at the objection, they will communicate to you and they will cite the reason as to why they objected to that. From the objection, they give you 30 days to issue a notice of appeal to the tax appeal tribunal, the TAT. So from the objection decision, you have 30 days. Make sure if you want to appeal, the period has not lapsed. Go on to the TAT, provide the document as requested by the TAT, and they will do their own verification of the records and the decision that had been issued by the authority. From there, if you're not satisfied with the findings from the TAT, you can opt to go to alternative dispute resolution on the High Court. So if you just want to proceed with the court, appeal to the High Court on the findings of the TAT, or rather use the ADL. But the ADL is very favorable, so you can go to that route. So basically, that's the procedure for the tax resolving mechanism. So our last item for today is the emerging issues in taxation. So issue number 1, which is under the emerging, we have amnesty. So the tax amnesty will allow KRA to waive our penalties and interest as long as we have paid our principal taxes. And it is open 2024 to June 30th, 2025. So you have until June 30th. Ensure that you have paid all the principal taxes for your returns up to December 2023. Any arrears from December 2023 going back, ensure that you have paid for the principal tax and you have applied for the amnesty. They will waive your penalties and interest. So after 30th June, you cannot enjoy the tax amnesty. So make use of that time. The other one, we have the reverse invoicing. So reverse invoicing, this is where the buyer has the chance to issue an invoice, electronic invoice. So we have talked about the e-tips, and you find in scenarios whereby maybe you are buying goods from the informal sector, they don't have the capacity to issue an e-tips invoice. So as a buyer, you have that authority to raise that invoice and transmit that to KRA. So that is what we refer as reverse invoicing. So don't come and claim that I never obtained an invoice from the supplier because they don't have the capacity. It's your responsibility to raise that invoice and transmit to KRA. We have the changes in NSSF contribution. So this one will affect the pay-as-you-earn returns because we said the NSSF, they are allowable deductions. So we have talked under the NSSF contribution, the changes that are effective 1st February, and they will affect our February payroll. So at the end of the month, we are going to see the differences between our net pay and whatever we received in January. We have the changes in pay as you earn. Under the pay as you earn, we have the shift and housing levy, which are now allowable, and in return, the relief arising from them are not there. Also, under the pay as you earn, there is an increase in the pension contribution to a registered scheme. It has increased from 240 to 360 annually. So that limit, which is allowable, initially it was 20 per month or 240 per annum. Now we have it at 30 per month or 360 annually. We have the mortgage interest deduction. So it has been raised to 360 per annum. That is 30 per month. Initially it was 15. So that one is advantage because it is allowable. So it will reduce the pay tax to pay on a monthly basis. Under the pay, we still have the free meals and other non-cash benefits. So the limit has increased from 48 per annum to 60. So any meal to a limit of 60 is exempted from taxation. The other issue is on the housing levy under the informal sector. We talked about that. We said both in the formal and the informal sector, we are supposed to deduct and remit housing levy 1.5% of the income that you receive to KRA. So currently, they are doing the audit on that. If you are in the informal sector and you are receiving income, but you have not been remitting the housing levy on that, and the PIN are ending up being closed. Like initially, what we were doing for the VAT, you find yourself in the special table, you find your PIN is under review. The same is happening for the housing levy. So ensure, even if you are not in the payroll, ensure that income you have submitted the housing levy 1.5% of income that you receive on a monthly basis. So those are the emerging issues that we have. And that brings us to the end of our presentation for that webinar. So I believe your questions are being responded in the chat box. So we can look at our calendar to see our upcoming events. And after this, we have a brief, like 15 minutes. We're going to get a demo for a software that we have. So just be patient. It's part of our today. So under the upcoming events, so tomorrow being 20th, we have a CEO breakfast. If you are a CEO, you are very welcome for a breakfast. That will be having tomorrow at Vika Blue Post Hotel from 8 a.m. to 12. You're very welcome. But it must be a CEO. Then on 21st, that is on Friday, we'll be having a tax webinar on the tax compliance and emerging issues. So that one will be handled online from 10 to 12. On 22nd, Saturday, we have a Skill Up mentorship. So I believe some of us have been attending our Skill Up mentorship programs. So we are going to be having that on Saturday. The venue will be Vika Road, opposite Mangu High School, Westmill Concrete. That is our other ground. So that's where the event will take place. And on Saturday, they'll be learning on yogurt making, cake baking, and mala making. So make sure that you are available for that. It's a free event. You just need to avail yourself from 10 to 12. So we have the CEO breakfast, as I've said. Then the tax compliance, which will be happening on Friday webinar. Then also we have a masterclass. We have an upcoming masterclass on March from 10th to 21st. It is a taxation masterclass. It is a 2-week masterclass. I believe we have some of us who have been attending our masterclasses. They are very comprehensive and knowledgeable. So you can take this chance and enroll as early as now. Registration fee is 25,000, and we have a certificate and CPD points to ACEPAC members. So it will be an online training in the evening from 7 to 9. Make sure that you use this chance. You can register. So if you are interested, you can give us a call. Our number is there so that we can onboard you. So the Skill Up program, which will be there on Saturday, it's free of charge. So make sure that you avail from 10 to 12. Then we have a lineup for our masterclasses. So the first one will be happening on March. That is the taxation masterclass. Then in May, we are going to have an audit and bookkeeping masterclass. Charges will be 25,000. July, again, we have another taxation masterclass. September, we have audit and bookkeeping. Then we close the year in November with another taxation masterclass. So that is our lineup for the masterclasses for this year. You can plan accordingly and register for the one that is suitable for you. So also for the skill up, we have a lineup. We do the skill up event on a monthly basis, one Saturday. So we have a lineup for the same. So for LWK Africa, so we have our services that we do. We have the tax services, the returns filing, we have bookkeeping, audit, we have accounting, software installation, accounting system audit, tax issue representation at KRA, tax audit process, tax health check, tax training, business operation review, company registration. So those are our services. In case you are interested in any services, be it audit, tax, you can contact us and organize on that. So under the audit services, we have the different categories of audit. The tax services, those are the different tax services that we offer, from the tax return, the tax health check, career representation, tax training, we all do that. We also have another department for internal audit. So apart from the normal audit that we do the external audit on a yearly basis, we have an internal audit. We can come at your company and conduct an internal audit for you. So you can also reach out to us for the same. So we also do advisory services on the businesses, be it inventory management, business enhancement, system setup and review. So we have our own system, which we are going to demonstrate in a few. So we can do the system setup and also review debt management, debtors and creditors, financial management, performance management, and the entire accounting structures. So those are basically the services that we offer. So you can reach to us and get the services from us. So for the software, it's called My Accurate Book. So we're going to have a demonstration to have a feel of the same. So our location, we have our Westlands office. We are located along Westlands Road, Gate 83. So in case you want to visit us, we are at Gate 83, Westlands Road. So you are very much welcome to pay us a visit. Yeah. And our contacts are there. So we have our telephone number, our email, and the website. So we can invite the Accurate software team so that they can do a demo to us. So we just remain patient. And at the same time, in case you have any extra question, we can respond that in the chat box as we proceed with the software demonstration. So thank you much for attending today's class. So let's wait for the demonstration so that we can learn something new. Feel free to ask questions in the chat box as we move on.
Hello everyone. Good afternoon. Thank you so much, Mary, for that awesome presentation. I believe we have learned a lot. My name is Kennedy. I'm a business development in the software department, and RWK and Associates, RWK Africa has always had businesses in mind, and for that reason, we came up with an accounting software. It's a simple accounting software that is meant to replace the current ones that we have in the market. It's very simple, very beginner friendly, and our target market is in the micro, small, and medium enterprises. So we'll do a brief demo for around 10 minutes. We see how you can onboard on the system. It's a self-onboarding. Yeah, sorry about that. So, My Accurate Book is a simple accounting software developed by RWK Africa for the micro, small, and medium enterprises in Kenya. So we realized a need and a gap in the business, in the market for the small businesses, where most of them are doing their books manually, and this becomes a problem whenever maybe they want to audit the year or they want to keep records for the business. So My Accurate Books has a free plan that is a POS. You can actually use it for free. So how you get on board? We do have a mobile application that is available on Google Play Store. So how you can onboard yourself, just visit this website. It's www.myaccuratebook.com. Kindly note that, myaccuratebook.com. Then if you want to download the mobile application, you can just click on get it on the Google Play Store button that is up here, and also on the first card. So when you click that, it will take you to the Google Play Store. This is how the app icon looks like. So when you get to the Google Play Store, don't get lost. Just look for this icon that has the multiplication signs, and the Accurate Book is one word. Kindly note as you are looking for this software. So we also have a web application where you can use this software online inside your browser, on your computer, other than the mobile application. So we are going to look into the web app today, and we'll see how you can onboard and how you can get your business going online and keep your books in check with My Accurate Books. So how to get started? It's very simple. You can just click this button that is labeled Get Started down here, or you can just sign up. That is if you don't already have an account. So let's do sign up. When you click on sign up, this will take you to the registration page. This will take you to the registration page. Yeah. So this is the registration page where you can do your own self onboarding. So the details that we collect are very simple. That is the name of the business owner, the business email. You create your own password, select your country, that is Kenya. For now, we are just serving the Kenyan market, but we are planning on expanding our reach to reach East Africa for now. Do a location. Where is your business located? Choose a currency. For now, we are only supporting Kenya shillings, but we do include USD there because we do have future plans to integrate the USD currency. Also, make sure that you give your business phone number, the one that will be used by the business. When you input your business number, you'll need to verify this business number. So when you click verify, there is an OTP that will be sent on your mobile phone, the number that you have input there. So kindly note that on this field, we highly encourage that you use Safaricom numbers, because we do have there are some problems here and there with the other networks like Airtel and Telco. So we highly encourage that you use the business number. We use a Safaricom as a business number. Also, now when you receive the OTP, you can just input it here. If you have a business logo, you can upload it there. Then there is a statement where you agree with the terms of service and the privacy policy. So once you do that, that means you will already have been onboarded. So all you need is to sign in. We'll go to the sign in page. This is where you log in. So enter the email address and the password you just created, and this will make sure that you get into the application. So basically, this is how the application looks like. This is the free tier. the POS, where you can do invoicing for free for now. But you do have an option where you can upgrade to a higher package that has more features. For example, you can see in the free tier, we do have a sales where you can create invoices, you can create receipts, you can create credit notes. This is where you have sold goods, and the people who have sold wanted to return these goods. So credit notes come in play. Also, you can receive payments on invoices. The first thing that you do when you get in here, this is the dashboard. This is how the dashboard looks like. The first thing that you do is to add items. You will add items that you sell. You will add items that you sell on your shop, maybe services, goods or services. We do support both of them. You can add either individual products or services, or you can import through a template that we have put here for you. So you can download this template, feed this template with all the data that is required, and come here, upload the file, and all your items will be inside the system. So once you have all your items inside the systems, now it comes to the sales part. So sales, you can do sales using two of the following models. Number one is invoicing. Invoicing is where you sell things on credit. So you can create invoices. You can create invoices. These are the fields that you can create invoices with. That is the delivery date, the payment due, the date that the payment is due. Also, if you offer a discount, you can put it there. If you have custom payment terms, you can fill them here. This field will be auto-populated when you select the items down here. So you can also select a customer. If you don't already, if you're a new user, probably you'll only have one customer. That is sorry. That is this walk-in customer. Walk-in customer is mainly meant for those businesses that are selling fast-moving goods, where you don't have time to take all the customer details that are required. But if you want to keep a record of all the customers that you have, maybe for marketing purposes or for just record keeping, you can add a new customer here. So you can choose whether this customer is an individual or an organization, depending on who you're selling to. So if it's an individual, you'll be required to fill in the first name, the last name, their phone number, email, and these two last fields are optional, but they're highly encouraged that you have them. So if you're selling to an organization or organization customer, there are more details that you need to add. For example, you'll have the first name of the contact person, the person that you're selling to inside that organization. You'll need to fill in the organization name and the display name that you will refer to this organization oftenly or frequently. You also need a KRA pin, and also if they have a branch. But these fields are optional. They are optional for now, but it's highly encouraged that you have these details. Also, you can put the company phone number and the company email.
Kindly wait for Ken as he handles something to continue. So we are still continuing with the demonstration. He'll be back in a few. He's sorting something.
Apologies for that. We had some power issues. I hope you can hear me. Yeah, so let's continue. So I was talking about sales, where there are two types of sales. You can do an invoice and a receipt. So we are creating an invoice. Yeah, so this is where you need to add these fields. That is the delivery date. This is the date where when you create this invoice, and it's also the date when the goods are delivered to the customer. The payment due is the date that the invoice is due. The amount for the payment for the goods that you have delivered. Yes. So the payment due date is there, day 30. The invoice is due. Before giving a discount, you can fill it here. The terms that for payments that you agree with the customer, and we are creating a customer. So we said there are two types of customers: an individual and an organization customer. So make sure that it is correct and you fill all these fields with the relevant information. So once you have done all that, you can select the item that you're selling. Input how many of these items you're selling. Maybe you're selling 2 shoes. One goes for 800 bob. The price will auto-populate itself. But if you're selling on a custom price, maybe it's a you wanted to change the price of this product as you're selling, you can be able to edit the price field when you're creating the invoice. So once you have filled out this, it's time to click submit, and this invoice will be created. So some of the created invoices are like these ones. You can see the details. This is how the invoice will be. Then you can print this. You can download this invoice and print it or send it to the customer directly. Creating a receipt is much similar to creating an invoice, only that receipts deal with instant sales. So creating a receipt, first of all, you need to select the payment method. This is where the customer is paying instantly. So either they're paying cash or through bank or via M-Pesa. Select one of them. I'll do cash. Maybe it's a working customer who is paying on cash. I'll not give a discount for now. And let's say my customer is genuine. So I'll sell the same shoe. I'll do 2. So you click add. This will add the product and create the invoice, the receipt. So this is how the receipt looks like. You can download it and share it with the customer. So the other one is credit notes. Credit notes deal with returned goods from invoices. So when you want to create a credit note, you come to an invoice that you have already created. This means that this customer wants to return these goods. So there is a button to create a credit note on the invoice. You can create a credit note. We had sold how many shirts? Let's say they want to return one. Sorry, I think we created a receipt. You can also create a credit note on a receipt. These are the goods that we have sold, and this person wants to return it. So I select the shoe that are sold, and this person is returning one shoe. The reason is because maybe it's defective. So you add the item. It will give you a summary of the credit note. Then create the credit note using that button down there. So when we come to the credit notes, we'll see that the credit note we just created is reflected up here, the first one. Issue 1600 and the reason is defective. So receive payments is more of billing an invoice. So when you come to receive payments, I think there's an error there for some reason. But receive payments is when you want to bill these invoices. When you bill these invoices, you receive payments. When you open the receive payments, all the invoices will be listed here, and you will be able to bill these invoices. So the other feature is customer management. You can manage all your customers here. We have some test customers here, but you can either create individual customers as they come, or you can import a list of maybe on another system. You can just download these templates, open it. There are some predefined fields inside this template. Sorry. Yeah, this one. There's some predefined fields, that is the first name, email, phone number, customer type, all that. You can fill in all that and then upload that document to the customers. The other one that you receive on the POS is the reports. You have inventory reports. These are report on the stock that you have, that you added inside the items. We have a data report. These are report of the people who owe you money. So these are basically the invoices that you have created and they haven't been paid, and they are categorized. The aging accounting receivables, that is the 30 days, 60 days, 90 days, and over 90 days period. There's also a sales report. These are a report on all the sales that you have made. It's very important. So it also has a status, whether it's fully paid or partially paid, or maybe the amount is yet to be paid. The other last bit that we'll look into today is user management. So this system of ours supports multiple users. You can add as many users as possible, assuming your business has multiple users. So adding a user, you assign them their name, you fill in their names, the email address that they will use to log in. They will use this email to log in, and the password that you created here. You can also prompt that they change their password immediately after they enter, or the password remains. Also very important is the role. Currently we support 3 roles. We'll be adding more as we go. We have an admin, a cashier, and an accountant. We recommend that a business has to have at least one admin, and the other roles to be distributed between cashier, accountant, and the other roles that we'll be adding. So when you select maybe a cashier, you also have the capacity or the right as the admin, the person who created this business account, to select the permissions that this person will be viewing when they log into the system. These are maybe the roles that they are to play, the tasks that they are to implement when they're using the system inside their business. So there is a dashboard, there is inventory, sales. Maybe a cashier needs to have sales permissions, and also customer. Maybe reports and user management, you can withhold, but it's according to your company policy. That's where you will measure how you will distribute these permissions. So once you have filled all this information in, you can add, and this person will be able to use this email address that you have put here and the password that you put them here to log into the system. So basically this is the free version. You can see it's a free package when you click on the icon up here. You can clicking on the billing button up here. So we do have a standard package that is only 500 shillings per month. It's a subscription-based accounting system. It's only 500. I don't think any business cannot be able to afford that. So under the standard package, you get all the free features. Additionally, you get the purchases features. This is where you can create purchases, purchase orders, and also debit notes, and you make payments for these purchases. You also have charts of accounts, full reports, for example, profit and loss, trial balances, and also you can have M-Pesa and bank integrations. This is a customized feature that if you need it, you can just plug and play for your business, and you're good to go. You have a gold package. This is an upcoming feature. It's still in development. So this package will include payroll, petty cash, and also a full support, live full support, and also all the packages in the standard package. Yeah, so that's it for the system. I'll send the link in the chats, and you can just get in there, onboard your business, and start exploring. So just visit www.myaccurate.com. Click get started or sign up, register your business, and start making sales. And if you want to upgrade, you can just click on the billing up there, and you can upgrade to the next feature. So thank you so much. I can see there's some questions that have been attended to. Thank you so much. I'm sorry for the interruption that we had. It's a power interruption, and thank you so much. Thank you so much. James, no, the standard package does not have the expense and the petty cash. This comes, the standard package has expense management, but it doesn't have petty cash. Petty cash management will come in the gold package that is still in development. I hope that answers your question. So any more questions? So I believe we have learned. Yes. James is asking, can you use petty cash as bank? The petty cash management system that will be incorporated inside this system, it will be linked to a bank. So your money will be stored somewhere where you can distribute this money whenever you want. That is paying for the petty cash expenses. So as soon as this feature is ready, we will announce it, and you'll get to know and use it. Ken Miyoma is asking, how do you integrate the system with eTeams? So the system is not yet eTeams ready, but the eTeams integration is the one that is in pipeline right now. So in like 1 or 2 weeks time, we'll have eTeams integration with the system, within the system. So developers are working really hard into this, and we are working into getting the approval by the KRA to do the eTeams integration into the system, our system, and other systems. So eTeams integration is done by professionals. It's a daunting task. Requires a lot of liaison with the KRA and there are those specific people who are licensed for Teams integration within systems. I hope that answers your question, Ken Myong. So, yes, thank you. I think we passed our running time, and I want to appreciate you. Thank you so much. Make sure you go online, register, download the system, and make sure that you take your business on manual that you have. Thank you, Jaflet. I can see you've included. Construction services engineer, you can use the services field to manage your business. Thank you so much and have a nice afternoon.